Hello and welcome to the fourth episode of D91 Labs Idea Series. Through this series, we intend to highlight a diverse range of ideas and innovations that aim to move the needle further on financial inclusion, as well as inspire the industry to build and serve the financially underserved people of India. I am Monami Dasgupta, Head of Research at D91 Labs, and I will be hosting the discussion today. Today, we have with us Sasidhar Thumuluri, MD and CEO of Sabke Impact Solutions Limited, which was formerly known as Sabke iTransactions, Basic Sabke iTransactions Limited. Sasidhar has more than 2 decades of experience in financial inclusion and capital markets in 20 plus countries. Since 2014, he runs Sabke, a digital finance subsidiary that leverages mobile technology and local entrepreneurship to offer last mile banking and financial solutions to the underserved. Welcome to our series, Sasidhar.
Thank you, Monami. Wonderful to be here, and thanks for the opportunity.
Coming to his company, Sabke is a Fintech company that aims to fulfill the aspirations of underserved communities of democratizing finance. Sabke serves over 3 million underbanked households, including 5 lakh borrowers, through a network of agents and feet-on-street sales force. They operate in 20 states in India, offering savings, credit, insurance, and pension through partnership with 12 banks. Through this interview, we will be discussing various aspects related to digitizing loan collections from MFI, which is the microfinance institution borrowers, and also touch upon the potential of other innovations that could serve the underserved better. So my first question to you, Sasidhar, is that the original model of Sabke was to set up agents for various banks so that they could facilitate services like cash in, cash out, or account opening or transfers. But soon Sabke moved to becoming a multi-product banking correspondent for banks, and currently they operate in 15 states of India offering these kind of products. Could you share with us what has been Sabke's journey and what is their role in offering a suite of products for the last mile customers?
Sure. So in our journey, we started, as you said, setting up this last mile touch points, what we call BC agents, with the intention that, there is this big gap in rural and semi-urban citizens in their ability to open bank accounts to begin with, and also to transact with a traditional bank. And then, of course, the rest of the journey is something that they will have to walk as they go. So we started our business the hard way in that sense, to help people actually get introduced to the bank. So most of the customers that we onboarded pre-PMJDY days, more than 1 million of them, have never ever seen a bank branch in their lives, and probably they have not seen even later, because they always relied on the agent. So in those days, the technology was also not fully ready. We used to capture local biometrics, to identify those customers, because by that time Aadhaar was also not fully available. So in that context, we try to create a closed loop customer base, and then serve them through this same outlet in all their basic banking needs. So the customer was coming out to the outlet, but they were not able to transact in a bank branch or an ATM if they were to do so, because they're not identified in that network. It's a closed network where biometrics are in the local environment. So we started with that because that was the basic need that we wanted to fulfill, while we were, not necessarily compelled to do credit at that time, because we thought if we start the journey with credit, then credit takes over. You will not be able to really do these services that are not necessarily revenue generating, or perhaps not paying for themselves. But the entry point for us was very critical from a mission perspective. So we started off there, and then we realized that this on its own will not survive, because no bank survives only on liabilities, although there is a concept of payment banks that came later with the infrastructure and technology that has gone along with it. But in those days, it wasn't that easy. So we said, now that we have a customer base, now that we have created a pool of touch points, and also this whole awareness about the last mile non-bank system working for the customers, we thought, why don't we then now try and see if we can start connecting them to banks for credit also. So that's how the journey, we next phase, second phase of our, last 10, 12 years of our journey is more, again, trying to penetrate more into credit markets. And during that time, our microfinance vehicle within Basics Group has also not been growing. So we thought perhaps it's an opportunity within the group also to see if we can offer credit services as a add-on to what we were doing in the beginning, the payment side. So it kind of filled the gap that we ourselves set out to create with doing cash in, cash out, savings, remittances. But then credit came into the picture later, as we thought it will complete the pie.
Wonderful. It's really encouraging to see the whole, range of products you're offering, and you've been around for more than, 10 years pre-Aadhaar days, and carrying on as the developments have come in the fintech ecosystem. But in the recent past, I mean, we've had the pandemic, which is, created a standstill on so many accounts, and it's been so much worse off for low-income households or microfinance borrowers. So one of the questions I really wanted to ask you that since the beginning of the pandemic, one of the very widely discussed ideas in the microfinance industry is that can we digitize loan repayment for borrowers? Or, if I have to flip the question for the industry, can loan collections be digitized? And this has always been a little bit of an uncomfortable and sensitive idea because we know that these borrowers are most likely women or people from tier three cities and beyond, and often they're from low income households who may not have as much as tech engagement or may not be as tech savvy. But I have realized in recent past that Sabke's experience has been different, and also there has been some encouraging user behavior in this context. Could you throw some light on that and share with us how has your experience been in terms of digitizing repayments for the last mile?
Yeah, sure. So, before COVID, we in fact had this crazy idea that why don't we, reimagine this whole microfinance in a fully digital context. So it was a part of our own internal transformation journey that we have set out in 2019, and we created some workflows to see how that looks like, and we called it purposefully remedy. Idea is to remedy the age old process of microfinance. So reimagining microfinance in digital environment, REMIDE, although it's spelled differently. And that was the origin of our thinking in terms of how we thought it should be disrupted. So we were trying to see if we can onboard customers digitally. That was our supposed to be the entry point at that time. But when COVID has hit, we realized the collections has become a challenge. And since the thought process was already in place, we have been able to develop some tools to offer to customers where we wanted to actually onboard them. We converted it overnight and said, let's start collecting. And then we realized in this whole discovery process that collections is the biggest pain point, obviously, right? In microfinance, onboarding, you onboard a customer once, but you have to follow up with them for 18 to 24 months physically, and cash and everything is in the system. So the collection piece was actually the long tail and also the more painful process because of not only the whole physicality of it, but also it increases the whole, reduces whole efficiency of the process. So when we introduced this Sabke Pay app, that is what we were ready with, and started testing the idea, because we were also in the same kind of thought that, oh, maybe MFI customers are not ready. We may have to educate them, teach them. And we did start a change management process, a company-wide change management process, where we have gone out to in a multi-level education program, both for our teams, because our team will have to first buy in, and then there is a customer level education program. And we also put in a incentive mechanism where we told our loan officers that if you collect cash, you get X rupees, but if you collect digital, you get 2X rupees. So it's also allay their fears that, what will happen to me if I convert my customer to digital? Will I be needed in the system? I said, you are needed even more, rather you will earn more. if you are able to do this. The premise is that if we are able to actually convert the collections into digital, we should be able to save a lot of time, which means the same loan officer should be able to do a lot more business, which means he's anyway going to earn a lot more revenue for the company. So I don't mind paying him a double incentive for collection because it's translating into higher business opportunity. That was the premise on which we pushed this incentives, and it has really worked. And the overall process, in last 16 to 17, 18 months of journey, we have seen 2 to 3% uptick every month that the customers are coming into the system. And today, as we speak, roughly 30, even in July, we are looking 35% of MFI collections come in a cashless manner to us. 80% of it come purely digital, which is through our app and the QR codes that we given out, and 20% come through agent networks. So this
Right.
is a very interesting revelation for us only, that we thought our customers are not ready, but actually our
Mm-hmm.
customers probably are telling us through this behavior that we are not ready for them.
Mm-hmm.
So it's much, it is given a lot of boost in terms of how we are carrying out this activity. This year, we are aiming to actually convert 50 to 60% of our MFI collections into cashless mode. And you ask this question, then what, right? So the thing is, this is digital collections per se may not be a biggest winning point, but that's a good entry point for two things. One is to understand that the customer is ready. They are actually, when I say customer, I'm not just saying the lady in the group. It can be a family member of the member also. We have no qualms about it because we always see family as a unit. And if some
Mm-hmm.
family member is helping her pay online, we are totally fine with it. So customer is ready. That means then we can introduce other digital interventions uh, much more confidently. The second aspect is we have solved a bigger pain point in the value chain of microfinance, and now it is the chance to solve the probably a lower hanging fruits. So in that sense, it is a we see this as a double advantage since this results have started showing up positive outcomes.
Right. This is actually even news to me, that so much of customer uptake in terms of digital repayment is going on, because the world we come from, it's all cash. It's always a group meeting, and it's has to be done every week or every fortnight basis. But this can change a lot of things, and as you said, save a lot of time, probably even improve efficiency on both ends for the customer to not forego their wages, as well for the collections officer to collect more per day or per week basis. But one of the follow-up questions I had, Sasidhar, is with every new way of doing business, with every innovation, there also comes some risk attached to it. So, in terms of digital collections, what have been the risks that has been in the space of digital repayments? And have you observed any difference between a customer who prefers complete cash versus a customer who is on the digital side of things, repaying through apps, mobile phones, and is okay with shifting to new modes of repayment? Has that has any impact in the risk that you all have faced in terms of NPAs or anything else in terms of late payments or any of that sort?
So that is an understandable concern, right? Because the whole microfinance business operates on the tenet of group and peer pressure, and there's this attachment to the physical nature of this activity. Somebody sitting in front of you, you are all together, you're paying cash,
The social
everybody's watching.
capital,
There's a lot of evidence-based lending also here, right? There are a lot of
right?
people are paying money physically, so every member is confident that paisa humne de diya. So it is something that they are also confident that somebody has taken the money in front of all of us. Now they cannot deny. So there's a
Mm-hmm.
lot of those aspects associated with group lending. But today, when I go to, I travel a lot and meet the customers almost every month. And when we are going to group meetings and a regular schedule, um, I don't think everybody is coming to a group meeting. The people have become, from the days we started microfinance, those days the women engagement in workforce was much lower. Although we always lent to women customers, they borrowed for the family and they were running household enterprises, or sometimes they are supporting the family economic activity, not necessarily engaged in it. So they were available most for most cases at home during work hours. Today, that is not the case. the demographic has changed. The customer is younger, customer is more aware and more employment seeking, and workforce has also, the demographics of workforce also has changed. So people are not necessarily staying home, they are engaged economically. So we also realize that anyway, we are not seeing 50-60% more than that actually people coming. As long as they're paying, they don't feel the need to be sit there just for for the sake of being there. So we're also realizing that perhaps it is a bit overstated that full group meeting is something that should be the only way that we carry out this business. Now we take out completely for even whatever touch point is there, right? Even if group leader is the messenger or at least the connecting point for the group, and now you're saying, oh, you're doing digital, then what happens? Even that touch point is not there. So what we're trying to do, again, it's a right now we have not taken out all the group meetings. What we have taken out is paper and cash. What we said, no need to write a receipt, no need to collect cash, right? Now the customer pays you online and receipt gets generated online. So that activity of counting cash, writing denominations, issuing a receipt, double checking, triple checking is over. Now what is the loan officer doing? He's going on the time and date of the meeting and they are updating the loan passbooks that is given to customers, and customer relies on that record for their own reference. So we are continuing that activity right now, but a 15-20 minute meeting is now a 5-minute meeting. Touch point is still there, but remaining 15, so he's basically able to complete all his meetings, which he does at 6 to 10 in a day. Usually he used to take 4 hours or so. Now he's able to complete all that in an hour. Okay, so rest of the time is available for him, whether he wants to get some rest and then restart his day, or complete his task before the dawn and go home. So there is that flexibility that is given to the staffs so that they will be able to complete their job more less stressfully than otherwise. The next step for us is, how do we even not have that touch point while the customer behavior doesn't change? That is the test that is happening right now. What we are saying is, if there is a customer who has consistently demonstrated digital behavior on payments, let us see if we can do a virtual meeting with them. Right? We did a dipstick test. I personally went in the field and said, as a customer, can you really do a video call? And most of them, while they were relying on their husbands and children for payments, they were happy to do video call themselves. And they were already doing, they do all kinds of communications. And not everyone, I admit that not every member is a smartphone owner. There is 1 or 2 members who are smartphone owners, and they all use WhatsApp calls, at least, if not anything else.
Yeah.
We said, okay, video call kar sakte hain. They said, yes, we can do video calls. Now we said, let's see if we can ask them to come to one place and we will actually talk to them digitally, right? Although it's a touch point, it's not a physical touch point, but at least you are able to connect with them, and they are also aware that, the same person is talking to us. So we are in touch with the company, we are in touch with customers. So there is this two-way traffic that is still going on. And we'll try to create a physical touch point maybe once a quarter rather than once a month. This is a test we are doing in this quarter as we go. And we want to see whether that will be able to work in the same way as a physical meeting has. Only precondition is the payment should have come in advance. And all the customers who will pay in advance digitally to us are given a freedom not to come for a physical meeting, but do a 5-minute online call with us. So for a customer also, it's an incentive because they don't have to, forego their date, like you said, the wages and all. We will then give them flexibility. When you think you can do, you tell us the time, we will do a call. Then we don't have to be stuck to that 11 o'clock or 12 o'clock because loan officers present on the ground is not critical. He or someone in the office will put it in the calendar, and morning 8 o'clock karna hai, afternoon 2 o'clock karna hai, sham ko 6 o'clock, whenever you think is the right time, we will reschedule our meetings on that particular time and date, and then we'll do a video check with you. We need only 5 to 10 minutes from you, not more than that. The second part is, while I hope we become successful in that. There is a risk aspect there. But in a physical meeting, typically there is also this aspect of financial education that was supposed to go along with it. And I must admit, as a part of the fraternity, that doesn't happen as much because it's very transactional nowadays. It's not so much relational business because we're all vying for time. So we said in a digital environment, it's even possible to run some of these financial education campaigns You can run a video, you can make it a bit more entertaining for them to come and watch. And then when you watch something, you learn something. So we thought we can reintroduce some of these lost concepts. While the physical touch is lost, but actually the connectivity is not lost, and the customer is probably can be educated. We can tell them new policies, we can remind them, and there can be standardized communication. In a physical visit, you are relying on that person who is going to the field. Sometimes they're good communicators, sometimes they're not, or sometimes they're in a hurry, they may not even. Here I can standardize everything. We can put a digital autoplay. As soon as meeting starts, you can play whatever you want, and then rest of it can be taken over by the loan officer as far as his communication is concerned. We thought we'll be able to actually take advantage of it, while there are risks that are associated with it. We are watching. As of now, data is not giving us much of a signals that any digital behavior is converting into a risk behavior. Good thing is, at least there is a very high correlation. I wouldn't say it's a causation. Very high correlation on good payment to digital payment. So generally, a good customer is also a digital customer. That's our data as of last 18 months data that we could. There's one cycle that we completed, one loan cycle we completed with some of these customers. So I don't know. We have to wait for some more time to establish the fact of causation, but correlation is very high from a good payment to digital behavior.
Okay.
So that
So
is
what
the
I'm
way
hearing,
we're moving forward. Yeah.
right. So what I'm hearing is by digitizing repayments, one, you've created a gateway for selling other products eventually where we can, think about it. Also, it takes away a lot of like geographical barriers and, logistic barriers of, timing and managing X number of people for so many meetings. It's also a new way for a lot of your customers to imagine how to do transaction in terms of lending and borrowing and repayments. Very interesting. So would it be fair to say, Sachidhar, that you are slowly moving from an assisted model to a do-it-yourself DIY kind of model when it comes to digital repayments?
Yeah, digital repayments, I don't see why we should not go to DIY model, because, good thing is UPI, big boon, right? UPI
Yeah.
rails are the big reason that we are able to be so, successful, and confidently I can say that we can actually go to DIY mode. On the
Okay.
payment side, collection side, yes, I would believe it is the case. Overall MFI journey can be also DIY for some set of customers, because we have the tendency to look at all the microfinance customers with one lens, because we give them the same loan, we make them to sit in the same group, everything is common for them, so we think it's a fun customer segment. But actually, this data is showing us that there are multiple customer segments, especially digital, non-digital, right? And also graduating digital, there is a middle tier, because sometimes they pay, sometimes they don't pay. They pay digital, sometimes they pay cash, because they are convenience seekers, not rather than actually savvy. So we have actually identified three broad sets of customers. It's a dynamic set, it's not fixed set. That there are fully digital customers who really don't need a touch point, rather they feel flustered when you actually go and visit them and make these meetings happen. So that customer could be a DIY for a full microfinance journey also, because their savviness,
Right.
their ability, they have the ownership of phones. They also probably are confident to manage the processes themselves, and don't want too many visits by third party in their house for, sabko kyun? Why should everybody know that you're borrowing, and why should everybody know that somebody has come to your house to, I don't want anybody in my house to collect money or give me a loan. My neighbor shouldn't know that I'm borrowing, right? So in microfinance, it's the basic premise itself that neighbor should know, right? Now we are trying to challenge that. Think that individuality is something that everybody seeks, and maybe there is a merit now that digital will offer you that opportunity to give back them that dignity and individuality. Now,
Okay.
there is a set of customers who will require an assistance. Perhaps their assistance can be given remotely. It doesn't have to be a physical presence. We will create them channels so that they can reach out to us by call or by video or whatever, so that we can help them onboard themselves digitally, but with an assisted. Third set will require a physical visit. We will not take that out. We are not taking any
Right.
physical touch points out at all. We are only trying to leverage and become more productive in the process.
Right. This is very interesting. The different personas that you spoke about in terms of digitizing a person's repayment journey. But as you were speaking, one of the questions that popped in my mind, Sasidhar, is the way low-income households or people, the borrowers that we are talking about, the way they receive their wages are typically in cash. How does the entire movement of I earn in cash to I am repaying digital, how does that really happen? Are they well versed with having that money in the bank account, checking the bank account, making that payment?
That's a very important question and very big roadblock, in fact, for us to convince our own staff to get there, because it's a general thought. And it's true that not every customer would keep money in their bank account, right? So what we are trying to do, this is still a group phenomenon. It's not an individual payment phenomenon. We don't want to encourage individual payments, by the way. We want to make sure that the group still remains intact. Digital, physical, doesn't matter, but still peer pressure should work. So what we're saying, two things. One is, if one member in the group can manage to have cash in their bank account, in her bank account, rest of them will become ATMs for her. Okay, so everybody else brings cash. She anyway needs cash for her day-to-day activities. She has money coming in the bank and she may have to withdraw that money at some point. We said, don't withdraw money, take it from your members and you pay on their behalf from your bank account. So still there is a physical activity going on within the group. We're not taking that out at all. We're saying, milna chahiye. You should meet each other. You should actually exchange, these activities. But as far as we are concerned, we appreciate a digital payment. So that is one important aspect that everybody is appreciating. And that way, within the group, we are managing that one person is able to take care of it. Now, there can be situations where even that one person may not have money in the bank. So in that, we get into some of an education mode. What we say, you know what, you have a shop, you have some activity going on, some customer pays you something. Try and introduce a QR code in your business. Take money at least to the extent of an EMI. We're not insisting that you should take all digital money, because tomorrow you may need cash also for your life. So don't take everything in cash, but at least start taking a part of your customer payments into your bank account through omnipresent, ubiquitous QR codes. And that is all I want from you. 5,000, 10,000, which is sufficient for the group, or if it is individual, so that they will also start getting into that digital mode in their own businesses, which is a good thing, because then that will give them a lot of leverage, because that data will be useful for them to show for further loans and other things. So these are the two important interventions that we are doing, so that the customer doesn't complain that they don't have money in the bank account. But if I'm getting 35%, 65% are still in that mode, right? So slowly that transition is happening.
Lovely. Very interesting insights, Sasidhar. Really, I mean, I have learned a lot from this conversation. And this really brings us to the end of this episode of Idea Series. Thank you so much for sharing your insights with us. The uptick in digital collections from microfinance borrowers is an very encouraging development on many accounts. But we are still very early in the day, and the associated risks need to be, well identified, acknowledged, and hopefully mitigated over time. Sabke, you all have been a pioneer in digital collections, and we hope the industry will have a lot to learn from your journey. Thank you so much for joining us.
Thank you, Monami, for this opportunity to share our experience. So look forward to talking to you later. Thank you so much.
Thank you. Bye-bye.
Bye-bye.